sponsored by Lexus of Las Vegas and Lexus of Henderson.
The coronavirus outbreak has been tough on small businesses, with many forced to close their doors or try to find loans to stay afloat. I spoke with local financial professional Brad Zucker from Safe Money Advisors about what borrowers need to know before signing on the dotted line. All right, Brad, so a lot of businesses unfortunately have been hit hard financially because of the coronavirus pandemic. So for business owners, what kind of relief can they expect?
Well, the federal agencies are coordinating with the banks, the credit unions, and the savings associations to provide small dollar loans to consumers and businesses hurt by the COVID-19. And the purpose is to help those that cannot pay their current loans to pay the balance off in full without having to borrow another loan. And the money has become available as of Friday. And the purpose here is to help businesses find the longest payback time, as well as the lowest interest rates and the smallest fees.
Right. So of course, when it comes to borrowing money, there are the do's and don'ts. So let's talk about the do's first. What should borrowers remember?
When it comes to shopping for a loan, you need to look at the fees and the length of time the lender is going to give you to pay back the loan. Instead of a single payment loan where the principal plus the interest has to be paid back at a certain time, consider installment loans, which allow you to borrow large sums of money over a period of time and pay it back with a fixed interest rate through monthly payments.
Right. Now, what about the don'ts of borrowing money? What should people avoid?
Well, most borrowers should avoid the single payment loan because it won't make sense for you. But others are worried that these small dollar loans are actually payday loans that carry high interest and lead to a cycle of debt. Payday loans look very attractive because they're easy to get. All you need is a photo ID, a bank account, and proof of income. However, many have hidden rules and lead to additional fees. So a 2-week payday loan could cost you $10 to $30 for every $100 that you borrow. That's nearly an annual interest rate of 400%.
Right, now you mentioned debt, especially during this time of crisis. How do you keep your debt in check?
Well, what you want to do is organize all your debt from interest rates and monthly payments. Gather up the business loans, lines of credit, business credit cards, and pay this off with one of two methods. Either the avalanche method, where you tackle the highest interest rates first, or the snowball method, where you tackle the lowest balance first. Either method, you want to make sure you're paying at least the minimum on the balance of all your debt to make sure it's paid off quickly.
All right, Brad, is there anything else that borrowers should remember?
Yeah, this is an excellent time to look at refinancing debt. If you're having trouble paying your loans, you may want to consider debt consolidation or refinancing. Refinancing is where you take out a low interest rate loan to pay off your principal of your debt. Debt consolidation is where you combine all the loans that you have into one single low interest payment. Both refinancing and debt consolidation is designed to help you lower interest rates and lower your monthly payments.
All right, Brad, thank you so much. We appreciate it as usual.
My
We'll
pleasure.
put all of that at KTNV.com.